Yeah.
If I'm so good at asking question, right, then I don't need to look for agent already, but I
No,
just
not
go
true, not
Google.
true, not true. Because for example, right, if I ask all these questions, right, next time, let's say I move house, right, do you think that because I asked this question already, I know how to do my ID, I do it myself? No, I value the services, I value the advice, I value the project management. I will just outsource because these are not the thing that I would like to do it myself.
Okay, hey guys. So after a really long time, the Backholder Pod crew is finally back again, and hopefully we're coming back with a big bang. And thankfully, I think I still have my hosting gig here. So of course, as a starter, I think let's go through a really important and I think very popular topic amongst the finance community, and it's of course clearly around this topic called investment linked policies. So I believe there were quite a few developments over the last 1 or 2 months, specifically around concerns being raised over this specific financial product called an investment link policy or investment link insurance. So it was kind of triggered by an ongoing discussion by Christopher, who is the CEO of Provident, and he is expressing his opinion over the complexities of the product and the role it plays in a personal insurance slash investment portfolio. And not only that, I think Straits Times really quickly followed up with an article saying that ILP complaints actually surged in 2024, and it's mainly due to market misconducts. And I think it's not really a surprise because you can just do a quick Google search, scroll through a few Reddit comments, and you can see that there is a whole sea of really negative opinions being shared around there. And I think I really just wanted to point you towards actually my first search history or first search term that I see under the Singapore FI Reddit thread. And here was what he said. So, and I quote, he bought an ILP in late 2022. It's I don't want to mention the policy name, but and he now knows that ILP were not the best way to invest, and it appears that my ILP is still up. I see a lot of people on this sub and in general complaining about how they lose money to ILPs. So is it possible to still make money out of it, and you have someone competent that bothers to manage your funds? From my recollection, my FA mentioned that they can switch the funds accordingly depending on the market. So I think the first few comments, I'm not going to read it out. Essentially, they're saying revolves around a few main topics. It's terrible. There is massive amount of fees. You can probably outperform in your own investments by paying lower fees. And by them charging or levying such a high amount of fees, you probably can outperform if you do it yourself. And if you can surrender, you probably will get back close to nothing in the earlier parts of the policies. And I do know personally, at least for those of you who consume Kelvin's content, I think he do talk a lot about or revolves around this topic of investment linked policies. So maybe for a start, Kelvin, just wanted to know your really personal opinion. I think you can pull back the curtains. You're not making a video for your own channel. You don't have to provide a neutral stance. Personally, do you have an ILP, and what's your real opinion around this product itself?
Actually, a long time ago, my friend sort of, I don't know is it trick or not, but back then I was a bit naive lah. So I joined a talk about how to invest. Then the pull out, wait, let's come to sign a plan under me. Back then I didn't even know that it was ILP. Then after I signed, I realized something's wrong. Like because I have to commit a certain amount each month, they have to pay the gains. Yeah, back then I didn't even know what I was investing in. Then they just say, oh, you are investing in these funds. Then I say, oh, okay, lor, you're the expert. So, uh, long story short, I lost money on that plan and I canceled it. We didn't keep in contact. Yeah, because yeah, things happen. But anyway, my stance on ILP is still quite neutral, even though I don't know, it got tricked because I voluntarily got signed into the plan lah. Because I see like okay, on one hand, ILP is high fees and stuff like that, but I do also see like robo advisors and even for advisory services like even Georgetown, Provident, they're also charging their own fees, right? So if you are talking about fees, then all these services are in the bad category, right? Because you are paying more on the fees. But on the other hand, I do see the good thing about ILP. Not advocating for it, lah. Because some people just don't want to invest, and even with all the stash away stuff, robo advisor, that kind of advertisement, they're still like so very reluctant to invest, man, because investing to them equals losing money and stuff like that. So for ILP, I feel that for this kind of people, getting tricked into investing, I don't know, is that the correct word or not? Getting tricked into investing is better than not investing at all. But of course, you have to have a good financial advisor lah, and not the kind of people who are just out there to earn your money and move on to the next victim. Yeah, I don't know, is that the correct word or not? Yeah, you isn't it a more sincere kind of FA lah to help you out. Then the other thing is the surrender fee. I think Eric have is very against the surrender fee. That one, I don't know. Because in investing, you also have people say if you invest short term, you are more likely to lose money. So for ILP, it's also in that same kind of category, right? You go and withdraw early, you lose money. Even for S&P, you withdraw early, there's always a chance of losing money. So for that, I'm also, it sort of balances out. So my complaint for ILP is not so much on the fees, not so much on the surrender fee, but it's more on the FA who is out there to get your money. Yeah.
So, in your
Yeah.
opinion, if there is a competent enough or good enough FA, it's fine to park your money in such a product.
Yeah,
Long
if
story short.
Punti is my advisor, I will sign everything.
Your
I'll
side.
just sell
Okay.
everything. Yeah.
Really good. So, Bunti got cute. Bunti, your opinion on this? Do you have an ILP? Last time, whether you bought it before, and what's your experience with it?
Actually, quite interesting that I believe I have friends working as insurance agent, but nobody introduced or tried to sell me ILP before. I think partly also because I work in insurance company before and still working in insurance industry. So I think people know that, okay, if I know all these things in details, maybe it's harder to sell me the products. So say for example, let's say you have a friend is like quite famous for operating a restaurant, right? Let's say a fast food restaurant. Will you still ask your friend to try to open another restaurant, something like that? It's like people know that I know the inside out, so they don't introduce to me. But you ask me whether I'm neutral or not, or I'm biased or not. I think it all depends on whether you whether that product suit you or not. It's not like good or bad, right? Because any products, right, any things, any services outside there, I'm sure that there will be buyer and sellers, right? If not, that product category or that service category will simply not exist, right? So it exists because some people need it. If you don't need it, that's your situation, right? But doesn't mean that the product is bad, right? So that's my take.
Well, the discussion here, when it's recorded, I think it's really quite a stark contrast with our conversations in the chat group. But I think it's fine. If you understand, you understand. But maybe you'll get Eric to express his opinion here. General thoughts of an ILP and your own personal experience.
So my own personal experience, I actually bought an ILP when I first started working because I thought like, can give me protection for such a small amount, and I can also choose to invest part of it. Why not, right? I can one shot, I can do two things. Because like Kelvin, right, when I first started working, I didn't actually know how to invest. I also don't know why he's investing. So when my agent, like, he is, to his credit, he's a very nice guy, lah, very old uncle. I think now like retired already. But he actually told me about this product ILP. He said that, if it'll be good if you can build up like some investment and all that while you're protecting yourself. So there's this policy that can do both. So you can tweak it, like you can increase next time if you have more need, you can increase your insurance amount, or you can like I think he said you can increase the protection amount also. Protection amount, investment amount, both can tweak up and down. So according to your own season in life, you can do that. But I think what wasn't really done for me, right, is that by right, I think ILP, right, they are supposed to actively advise you on which fund is good for what season. Yeah, so they're supposed to say, oh, this fund is better now. Maybe you can rebalance your holdings and all that. So they are actually supposed to do that annually. So no, it wasn't done for my fund. And then after like 8 years of holding it, I held it for 8 years, I think. Then I saw that wow, it's it's not even break even. Like for all the premiums that I pay in, I think I still make a loss of a few $1,000. Then I'm like, very strange, eh? I thought I've been investing all this time. Then so I realized that actually the distribution cost is very high. So basically, I think if I'm not wrong, the first year of my premiums all went to the distribution cost. But I don't quote me, I'm not sure whether I remember it wrongly. But all I remember is after 8 years, right, I surrendered the policy. Quote, I still lose money. Like for example, I put in 10K, right? Over the 8 years, I only got back like maybe 7 or 8K. So I definitely lost money on that. And it set me thinking of like, hey, how come I invest so long? I still haven't break even. Like I don't even have anything to my name. So I mean, like Kelvin will say that, oh, is it Bunti? You'll say that it's for the buying of my insurance. But then the thing claimed to do two things at one time, right? Supposed to insure me and also to slowly build up my units in a unit trust, which I think didn't happen. So I'm like, it's not really serving its purpose. So I'm a bit, I'm a not so happy customer. If I can leave a Google review, I'll leave a 1 star. It doesn't perform what it's supposed to do. In fact, actually, I don't mind the high fees. like Kevin was saying, like is it a high fees? Provident and Josh Tan also charge high fee. But I seriously I don't mind paying people as long as I get the outcome that I want. Like after 8 years of doing investing, I get some sort of a return. Maybe it may not like match S&P, but at least there's still some return. Let's say like 10%. I don't think I'll be pissed off. I'm like, okay, I got my protection. I got 10% return. Well, better than nothing, right? But it's like I got my protection, but I lost money. So one of the function is not performing well. So I'm like, And I think 8 years is not a very short time. And then when I talked to my agent, right, he was saying that, if let's say you hold on to like 50 years old, right, you probably have to draw down on your investment units to pay off the increased charges in the mortality rate. So something like that. Lah. So I'm like, okay, then you mean to say that if I hold it on for even longer, right, my investment units will be used up by the insurance. So I'm like, what? What is this for? Like, I seriously, I don't see the point because, like, apparently, I talked to more some of the experienced agent friends, right? They are not my agent, but they are agent friends. I say that this ILP, is it possible that you get it and then you can hold it, and then some very genius agent will help you manage your investment until you what big, and then you hold it until you die. They say, no, that's not really very possible because after a certain point, right, the insurance cost will eat into your investment definitely. Then after a while, it will dwindle down. So the end point, right, I think of ILP, they were saying is really to like mitigate your insurance cost. So at some point, you're supposed to like uh kind of cash out of it, something like that, and then switch to something else. That was what I heard from them lah. I don't know whether is it like should it be a general thing? Maybe Bunti can.
Yeah, actually, I just want to ask, because you said when you surrender your policies, right, there shouldn't be a question mark on where the money went, right? For example, I'm sure you are able to look at the statement and check like how much money went to, let's say, like the distribution, right, which is the commissions to your agent, right? Then how much went to all these costs of insurance,
Yep.
how much went to all these expenses, and I think the most important one is that you can actually see like the units that you bought, right?
Yep.
Are they performing well or not? It's like if you just look at the funds, right, you can just look at the chart whether it's going up or down, right? Or look at like let's say some reports, fun facts, and you can tell like whether their performance over the past 5 or 8 years, whether it's positive or negative. You can see those, right? So have you looked at those details?
Yeah, when I surrender it, of course I saw it lah. But like I said, the bottom line, I only see the bottom line because I look at the fund. I also don't know what fund they buy. It's
Yeah,
like
I think my question is more like, is it like case one, right? Is that the funds actually make money, but after you deduct all the fees, then become net negative, or is it like the funds itself, right? It's like either not making money or actually lose money.
I think it should be the first case. Like, so I deducted like all the fees that I pay. So like for example, I pay 10K premium. I only get back after the surrender, right? After 8 years of holding it, I only get back about 7-8K. So theoretically in my mind, I lost like 2K plus.
Yeah, I think the question is also like how much is the ratio, right, between the premium that you paid, right, versus the protection that you get. So because I think for ILP, first thing, ILP is a product category, right? So there are many different types. Some really they focus a lot on the investment part. The other one is that they focus a lot on the protection. I don't know yours, but if let's say if the fund performance is as per illustrated, right, but then if you look at the surrender value is much lower, potentially, I'm just guessing based on what you just shared, right, is that the ratio of the protections versus the premium that you pay, right, is actually very high. Meaning that for that kind of protections, by right, you should pay a lot more to have the investment component. But maybe your agent, when he structured for you, maybe he tried to minimize the premium that you paid.
Yeah.
That is why if you look at the ratio, right, is that okay, if that's the case, you actually pay a little bit, and that amount is not enough to support the protection, meaning that after all the cost of insurance being deducted, right, you are not supposed to earn much one from this. It's not a investment vehicle for you. But this one is ILP, right? It is very flexible for you to structure. Even for the same product, you can actually say, for let's say 100K sum assured, right? Agent might advise you to say, okay, you pay, don't know lah, just dummy numbers, right? Let's say 2,000. You can say, well, can I pay 5,000 just to save a bit more? The answer is of course yes, right? Because then you steer that policy more towards the investment and saving rather than for protections. So I think that one is quite important in terms of like knowing where the money went. So I think your case is that the protection part is too much, or you want to have some investment, right? You actually need to put on a lot more premium into it.
Actually, if I don't remember wrongly, right, I actually skewed my policy more towards investment. because we were discussing, me and my agent, he said that, oh, you're still quite young, you don't have any dependent, so the protection maybe not so important. Maybe you can scale it up next time when you're a bit older, you get married, have kids, all that. So now maybe you put more towards the investment. So I cannot remember the percentage now, but I think it's definitely more than 50% go to investment. Yeah, so that was my case lah. Like maybe 60-40, something like that. Yeah, and the investment that he advised me then, right? I think even though I don't recognize the fund and all that, I think it's like half equity, then half is like a bonds. So it's very safe one. So I say, hey, I don't like to take risks. I cannot. Then he like, okay, save. Buy the index fund and then buy the bonds. Yeah. So even despite being safe and all that, so after 8 years, I think only managed to accumulate maybe like 7-8K. Yeah, maybe because my premiums amount is not big lah. Maybe like
Yeah.
$500 a month.
Yeah, I think that's the main issues because like you just because I think the one that you bought is the older type of ILP.
Yeah,
so
old
so the
type.
older type one, right, is that the amount that you pay, the first premium that you pay, right, then I think huge portions straight away go to distributions. So
Yeah.
you are left with like much smaller portions, right? Then second year, similar things happen, although the allocations become higher. Then third
Until
year,
3 years, right?
yeah. So usually it's like first 3 years is like the allocation is very low. So
Yeah.
so actually when you say you paid for 10 years, you should actually just assume you paid for 7 years, right? So because I think the distribution part that one take quite a fair chunk away. Then after that, the remaining one with their investment return not able to cover your expenses and cost of insurance. So that's the situations that you were in.
Kunti, I have a
Mm.
question for you. Just now, I think when you were describing it in a general sense about investment link as a family of product or category of product, and then you say different products are made available due to competing needs and demands, right? So that if there is a need, then there'll be the existence of such a product. Maybe in your view, if you can share a little bit more, what would the ideal profile of such a client be that is suitable and relevant to have an investment link in his portfolio?
Yeah, I think let's take a step back and look at the insurance product in general. There are many types, right? But if you look at the different category, right? So first thing you have product like the traditional endowment kind of products, right? So those kind of product is like, let's call it like, they even call it like non-participating, meaning that whatever illustration benefits, right, those are all guaranteed by the insurers. So, but insurance companies, they provide you all this guarantee, meaning that when they take your monies, they don't invest in all these equities, real estate, all these growth assets. So I think that one is like, okay, if they only take the money and invest in bonds, right, they can't give you much return. The return is very low. Then the other types, right, is what they call the participating product. Participating means that when the insurance company take your money, right, they will invest in like a mix of different asset allocations, right? So some money will go to growth assets, some money still go to fixed income and so on. Then they were able to pay you or support a higher returns to you, but also in the range of let's call it like around like 3 to 5% this kind of range. So it's like not fantastic because maybe roughly speaking, about 1/3 of the allocations will go to like all these growth assets, real estate, public equities, private equities, this kind of asset class. So also not fantastic. But of course, there will be a group of let's say like customer, right? They say that why so conservative? Why you need to put like 2/3 of your money into fixed income? And fixed income, especially during those low interest rate environment, right? They don't earn much. It could be as low as 1 to 2% kind of returns, right? So then they say, oh, because I'm young, but I still want some protection. I want some investment. But for the investment portions, I want it to be like 100% equities, for example, right? Then this type of customer, I think if you are agent, you will say that why not just buy ILP, right? Because if you buy ILP, then we can structure the investment based on your need, based on your situations, and then I can just all in those 100% of the units that is allocated, right, all go into equities. Then you say equities is not enough. I want to all in tag inside this ILP, right? Then they can do it for you, right? But let's say if you buy, whether we call it like the par product or non-par product, you don't have that flexibility to choose where your money goes into. So that's why ILP, I think that's the plus point is that it's very flexible in terms of like where investment will go. The other thing is that it's actually a lot more transparent as compared to the other types because you can see your money, how much went into the account, how much used to buy which funds, and then what's the cost of insurance, what's all these expenses that they deducted. So it is actually more transparent. So I wouldn't say that. I mean, there's so much negativity about ILP, right? But actually, I think there's a lot of like advantages as compared to other type of insurance types. Yeah.
Sorry, maybe I didn't really catch it. So what's the ideal client profile in this case when, let's say, it's good to recommend, let's say a friend that comes over and consult. When do you point him towards, oh, I think maybe getting an investment link with a financial advisor is a good idea?
Yeah. Okay. First thing I would say that if the person just focus on the investment, right, then ILP is not it's not the tool, right? Because of course you can buy index funds, you can buy ETF outside, you can DIY. There's much like better way to invest, right? That one confirm, okay, not arguing that, right? So, but I think when you talk about ILP, right, first thing is that the persons step in and say that I need some protection. I want to buy insurance for protections. So it could be like as simple as life protections, meaning that let's say today I die, then my family gets something, right? This is the simplest form. Or you can attach it with riders and other stuff, right? To make the protections more like you get to enjoy that protection, right? So that one is a must, right? That one is like the most important thing. Then on top of that, then if the customer say that, oh, or the client say that, aside from protections, why not you help me manage all these things? And I want the investment, I want the saving component as well. And I want to structure it in a way that fit what I want. The example that I just given, right? I say, oh, I want 100% equities. Don't bother about all these fixed income, low returns. I don't want all this. So if I have a very specific kind of allocations in mind when I mention about investment and I want to bundle together, then ILP is the way, right? So it fits that specific needs for those who wanted protection and also investment at the same time.
And I think the presumption here is with the same person, because if let's say I can just do my protection with the financial advisor, and like you said, I can DIY or even just head towards a bank or someone like iFast when they do like real investment because they just sell you the unit trust instead of wrapping it around a insurance policy. Is that the right idea that I'm talking about?
Of course, you can unbundle it and then just say, oh, for the insurance, I buy insurance policies. And then for the investment, I DIY or I buy unit trust. I think that is perfectly okay. The unbundle is really up to you, right? But the bundling part is that I think it's from agent perspective is that, okay, now I'm serving you already. I'm doing, let's say, like financial consultations for you already. Then instead of like selling you multiple products, why not we just one policy done, right? So I mean, in that way, it's like kind of convenient for them, I believe. That could be one reason, but there could be other reasons as well. But I don't want to speculate too much. Like, I'm actually not in the insurance advisory role. I don't sell insurance one. So I can't really give too much opinion on that.
Kelvin, I think just wanted to understand, right? If there is this uprising of complaints on ILP, do you think the local finfluencer space has failed in the sense where clearly the education is not high enough, and then they realize that they go on to Reddit, then they complain, and then they say that, the literacy environment is not strong enough as well. Do you take it upon yourself that you are not impacting or influencing more people to, in that sense, really, whether is it DIY or just weigh the different options that they have in this whole investment thing?
Actually, since the low-cost brokers came in, there have been the influencer space in Singapore has also been rising at the same time because they sort of thrive on the sponsorships of all these low-cost brokers. So this is not just my opinion this is what the OCBC Financial Wellness Index, they saw there's an uptick in the there's a financial literacy, the number of people who are investing around 2021. There was a spike since around that time. So right at that time there was the Tiger Brokers and Mumu that came in. So I think it was also during this time all the Singapore FI, the subreddit, started to do quite well, because previously it was only the people who were reading blogs, they learn about investing. Then after that, because of all the YouTube space started to do well, so they learn a lot more. So I would say the ILP people are more the victim. I don't know, is it the victim? The people who sign up to ILP are more the people who have not learned about investing yet. So they do not have much exposure to all the blogs, to all the YouTube space. But also, I would say it has improved because that's also why you see the complaints have gone up because more people are spreading awareness about the ILP. They are more aware. Then they realize that, actually I can do my own investing and I don't have to rely on financial advisors. But those are the more savvy ones. So like I agree with what Punti said, that so those people who are not savvy, I would say ILP may suit them if they need advice from their advisors. But of course, it depends a lot on the advisors themselves. If they don't need advisors, then I guess ETF. But even ETF, you still have to choose your own ETF. What is the correct ETF for you? Like, is it tech? Then some people say, tech is too I don't know, too concentrated.
Is there really a right ETF though? Because it seems like whenever I go, don't talk about Singapore. I think if you look at overseas influencers, all the Angmo countries, Australia, UK, US, all just ask you to buy one particular ticker that we're not going to name. Just close your eyes and hold for 20 years. Oh, no problem. Confirm heartbreak.
Yeah.
Is there really a need to even bother about tactical allocation, looking at specific sector, express a particular opinion? And I forgotten, was it Eric that said about moving your funds in and out, doing some maneuvers for the market. Is there really a need for?
But that's the thing,
for that?
Chicken. You are not doing that doesn't mean other people are not doing that, right? Because there are many different style or the different ways of investment, right? They are advisor and there's also clients that believe that for those who really look into all these funds, right, they are able to navigate, they're able to rebalance, and they're able to generate some sort of value from that advice. Like that advice is essentially telling you, oh, you should actually go long on the tech now, or then 2 months later I tell you, oh, you should switch out and then park your money in fixed income for now because market is not doing good. So this kind of advice, right, is kind of common, and there are people who enjoy that kind of service. They enjoy that kind of advice, like to tell them what to do, right? So I don't think this is not. I don't see that as like a victim. This is really like a customer and client or service provider kind of relationship, right? So I'm sure there are so many different type of services.
I completely get where you're coming from, but I think the preamble or the context here is if there is an advisor-customer relationship, and the context here is financial, the financial journey of the client. And regardless, of course, you need to inbuild the goals and the objectives of the particular person. But whatever that you have shared, which is the tactical and all the movements, I think we have overwhelming amount of finance literature, both academically and non-academically, that says that the more activity that you generate, probably overwhelmingly and on average, people tend to underperform quite severely. Right, I think we can pull it out. You are in the finance space as well. You will probably have studied about the relationship between activity and movements and versus somebody that just buy and hold through the entire market cycle rather than moving around, which no doubt I think some people will definitely outperform the market in some specific time periods. But that is not like in the quote unquote general sense the right way to do things, right? I don't know what's your thoughts on this, because clearly I'm not sure if this lesson or this research or this data statistics is being put at top of mind in the first place to tell them that buy S&P 500 20 years in the last 100 years actually will probably outperform everybody or the average investor that moves around this thing.
I disagree because I think it's quite simple. Because if let's say the passive way of investment, according to all these academics, is true, right? And everyone should follow that, right? Then so many industry need to close shop, right? So many investment companies that literally like selling active funds, right? So all those hundreds of billions of dollars of AUM need to liquidate it, right? Even let's say if I'm fund manager myself, right, and you are also fund manager yourself, right? I manage my own money, you manage your own money. Our portfolio doesn't look the same, right? And our portfolio also doesn't look the same as the passive funds, right? So why are you like doing all these things, right? So I think it's not about like whether you can outperform or not. I think it's more about like this is a free market. People can choose what they like, right? So they can express that via what funds they choose, right? So and you are not supposed to take that freedom away from them, right? So they want to choose, let them choose, right? So free market.
I think that's a very important point to also note in a very broad sense why what I'm trying to get at. I don't know whether I'm being stubborn in this approach, but I completely agree that it's a free market. People can express their opinion. It's an individual relationship as well. But when I try to draw the contrast between the dynamics here, because I think recently there's a lot of discussions around people getting warning, MAS is stepping in to look into the influencing space. I do have a very small suggestion. I don't know whether you will take it up or you think it's a good thing. Because there are concerns, right, about the purpose of mis-selling here and the idea that they are being mis-sold. They don't really understand what they're getting themselves into. I think it's probably a healthy or a good protocol to maybe record down conversations, what are being shared. Of course, on a PNC level, it's private and confidential unless something calls upon the recording to be reviewed by, of course, authorities, not to be spread out to, or it should be archived somewhere so that it's not a you say, he say, she say kind of situation in the future of this kind of complaints. And why do I say so? Clearly also because we're coming from the point of view of an influencer. Most of our work, Kelvin, me, Bunti, I think Eric, less so, we put our work online. Everything is archived, everything is recorded. Even if you removed it, I think you can probably find it somewhere. And it's clear that there is a lot of very explicit and transparent check and balance here. Because whatever we put forth, we know that people will be listening. When you reach a certain viewership count, and not assuming that you're not just starting out. So then there is this so-called filter in mind. You'll be a lot more measured in your approach when you're talking about something compared to a one-on-one conversation. So that's why that's what I was also saying, like in terms, if you're trying to so-called shut down opinions or maybe specific things you cannot say, or even I think maybe some people are very, very interested in the crypto space as well. And then you say, oh, because crypto is like, I think the general stance in Singapore is quite clear. Crypto is a relatively dangerous asset class with not a very strong proven track record. I don't want to take away the crypto creators' point of view or the ability for them to express themselves. But of course, you can say that, oh, what if this person is pumping up 10x leverage, asking people to leverage to the T and go all in into a meme coin or something like that? I think he should still has his so-called freedom of speech to express his opinion. But I do think that you can allow the market to decide whether this person's opinion is worth listening or not. Because regardless whether you think or you want to support a local creator, the overseas creator is always there. The outlet is there. The idea is there in the whole town hall. Unless you're telling me you're gonna segregate and able to remove this sort of content from, like, you put a Singapore firewall like the Chinese firewall, then sure, I think I have no answers to that. But I think it's still generally a pretty open space. I'm not too sure what Kelvin thinks on this.
Think of what?
Actually,
Sorry.
actually, can I comment? Yeah, actually, just a fun fact, right? You know which country, right? When they sell ILP, right? The conversations need to be recorded.
No.
China need to record. So there's such regulations for ILP only. I think other type of insurance only. That's why I think partly also because of that, right? ILP is not selling well in China. Maybe you can say that that's a good thing, but that's the situation. You can fact check me.
Is that the case?
Yeah, ILP they need to record.
Interesting. I don't know.
Can
I'm
I-
just, yeah, sure, Kelvin.
I want to share screen. Yeah, let me see.
Wow, suddenly get serious now.
So this was I don't know. Can you guys see?
Can.
Yeah, so this was like back then I was meeting a friend who was just into this he just become a financial advisor lah. So he wanted to practice his pitch on me lah. So, but I already told him that, oh, okay, I'm not, just to let you know, I'm not buying, but he just want to see what I think lah. So this was the fund that he was going to, this is the model portfolio that he would recommend to someone like me, and it was given to him by his company lah. So when I see it, like, okay, there are 7 funds. If you are someone who is a fresh grad, not exposed to investing at all, you wouldn't know. You wouldn't even know what are all these funds, right? Like American equity, like, okay, maybe the American S&P has done well. What about Japan dividend? Is it a good fund to hold? But oh, okay, I don't know. But my advisor told me that this is what they recommend is a growth fund. Oh, okay. Then what about US quality growth fund? What about Singapore equity growth fund? Looking back, this past year have been doing well, like Singapore, US also have been doing well. What about emerging markets? Has it been doing well? Is it a good fund going forward? So what about the last fund, the fixed income fund, the bond fund? So my point is, like, if you are a new FA, recommending all these funds to someone who doesn't know investing at all, but both is like chicken talk to duck lah. Both also don't know what each other are. One don't know what he's selling, the other don't know what he's buying. And because maybe it's a pretty girl, then he's going to go and sign like $3,000 a year, that kind of plan. Then that's why I say my if I need to sign, I need to know whether the FA is good or not, and not some rando who is throwing up model portfolios at me and I don't even know what is he doing. Versus like what you can say, right? For influencer, if the guy makes a mistake, you know he's done for already. like that time I sort of announced that, oh, I want to be transparent, and let me tell you guys that I'm selling away all my Tesla holdings, and you know the feedback is going to be quite strong, right? So but for FA, you don't even know. There's no feedback lah, unless the guy realized that it's a mistake like 5-10 years down the road. Actually I bought the wrong funds. But looking back, maybe he didn't buy the wrong funds. Maybe that fund underperformed. Like maybe Eric, when he buy the S&P, it was in the 10-20 year lost decade. Did the agent recommend the wrong thing, or did he just enter at the wrong time only? So there's a lot of things at play, right? And for that, you need a really good agent to tell you, like, okay, the US is a good thing, you should hold, shouldn't panic. This Eric, don't panic sell, then go and complain to everyone that he lost money. So you need a good agent, and not just any random agent who got a license 2 months ago and started selling ILP or just to hit his quota, that kind of thing lah. Yeah, basically you need to see his Kegel lah. Ask him open up portfolio lah, show you.
But I think just like you show this list of funds, right? Let's say if you look at the funds you don't understand, right? And then the pretty agents that's selling you the funds, right, also cannot answer you what are those funds, right? Okay, first thing you shouldn't assume she don't know lah. Okay, you should start with asking like what is these funds, what are the components, what is inside. Let's say if she don't know, right, that's even better, right? That means you need to go back and do homework, right? Then you two study together, study a fund together. Then
No,
both
I mean,
can
but
learn
if
together.
you're new to investing, you wouldn't even know what question to ask, right? Then they will almost say, you see, this US fund that did well past 2 years. No, not even US, but that time was the BRICS. The BRICS fund was doing well past 2 years. It's all-time high now. Are you going to buy? It's the 50% CAGR. Right.
But similar to buying anything, right? The simplest questions to ask is like, what is this fund, right? From there you can drill, right? So this one, I don't think you need to be that knowledgeable to know what questions to ask, right? Like
I
simple
think-
things is like, what is this? Why is it good?
I disagree.
Why is
I
it
disagree.
what-
I feel like Bunti has because you're applying your worldview on what you think as a consumer, what you would do. I would dare counter propose that for a lot of people when they go into such conversations, I think number one, they're overwhelmed. Number two, they really don't know much. So then the reliance here is just I trust law. If let's say today Bunti come in with his 20% CAGR and then he tell me, okay lah, you close your eyes, you just put into these 5 funds. I will really just close my eyes and put into these 5 funds. Don't need to talk so much because to me, you are just running the protocol. 你在跑流程啊, you need to explain to me this, then I just, okay. But basically, I don't know. I'm catching no ball. I tell you why, right? Why I have this very, very strong opinion, right? I've recently went to 2 weddings, and clearly I think I'm more woke, more financially woke in that sense because people do follow me on my Insta. They know that I talk about investments on YouTube and things like that. Like I'm a creator in this space. And the natural question always is, hey, market's not very good, huh? So I should buy what? You get what I mean? And I think these are private conversations that cannot hold me accountable. And I think we all have a lot of all these sort of private conversations. And then you can say you're skirting the lines of whether you're really providing financial advice or not. But clearly, because there is no commercial relationship, I'm not being compensated, and there is no official, like contract that states that I'm here to advise you. I can express my opinion, I can tell you about something, and more importantly, whether you take action or have any execution is also not on me. So we can talk a big game, talk until like, general advice, I show you some TikTok, people say in 20 years S&P won't lose money on a rolling 20-year period, all that. But there is no relationship, you see. You don't enter into a commercial agreement. I don't help you to implement. Maybe you listen already, tomorrow you're going to go, at night you go home, you forget everything. So then, through a lot of all these conversations, and I try to size their thinking and whether they're serious about investing, sure, because we are all bitten by inflation, they want to grow their money. Whether they're hungry enough or not to really understand what the intricacies, what is S&P 500, why I need to invest, index fund, still need to allocate here and there, got bond 60-40. Honestly, really a lot of people just don't care. They want the magic pill. They want something, they buy already, right? Confirm what, then within 20 years, they just close their eyes, just throw into this, then wake up, suddenly extra few 100,000. That's what they want. And that is, you have to recognize that fact. That is the reality on the ground. So coming back to my point about you saying that, customers should do their own due diligence. Yes, I think Singapore as a general population, very smart, very educated. But finance in this area, I'm not too sure. I mean, your expectations, I'm not too sure whether it's really applicable to the average layman on the street. Unless they're interested, of course.
Yeah, maybe when I talk about all these financial products and let's say looking at funds and then I say, okay, we should ask this question 1, 2, 3 and try to understand the funds, you might say that, because you are in the industry, of course, you know all this. We are all, interested with all these things as well, right? So of course, I know what to ask, but average persons don't know what to ask, right? But I would just, let's say, bring this conversation into something else, something which I'm not expert, right? And then how I use that, right? Is that, for example, when I reno my house, right? No experience at all, 0 experience. I don't know a lot of stuff on. So what I did, I engaged ID, right? So ID is like, okay, they do the ID interior design, and then also the ID also act as like the what do you call it, contractor, right? So he will help me like choose the stuff and then manage the project end to end, right? But I think it's not just about like getting the project done, right? There's like, throughout this process, right, there's so many things that I have no idea, like, is this material good or not? What can you advise me or this kind of things, right? I think I throw like, more than 100 questions to my ID. I mean, throughout the process, even after the stuff is done, sometimes got some problem here and there. I also will text my ID and ask, hey, this kind of situation, how should I handle? Then he will just tell me, okay, you DIY lah, so easy. This kind of thing is that, to me, that is like kind of like advice, and we pay for that service. There's already a commercial terms, right? We pay already, and usually there's all this, after sales services as well, right? Because he already earned my money, right? So I think if you say, okay, I pay the money already, I don't know what to ask, I don't know what question to ask, then you are just not extracting enough benefits from that service. So this could be true for, let's say, like renovation. It could be also true for investment, right? Let's say if you thought that, buying ILP is just a transaction, and then the person recommended me, I just, yes, tick, and then done already. I purchased my insurance already. Of course, you can do that. You can say that, okay, I totally trust my agent. He make all these decisions for me. I just sign. I think that works for those who are busy and those who who trust the agents completely. But there's always people who take this ILP as like, okay, like Kelvin's situation, right? Just graduated, don't know about investment. Now suddenly throw me a list of funds. If you are curious, you can actually ask the agents, right? I mean, last time, there's no other way, like no easier way to learn. You learn either through reading blogs, reading books, or talk to agents, right? Now, of course, you have all this AI to learn. I think that one can speed up the process, right? But I think whether it's AI or whether it's like a human agent, right? The first things, the learning process start with the curiosity, right? You need to know, like, I'm curious, I want to ask, then you learn, right? So this one you cannot skip, right? If you don't ask, you don't extract value, that's your situation, that's your, I mean, you are not extracting value.
Would
This,
be
by the way, this is
just
also
want to
true.
say,
Yeah.
if I'm so good at asking question, right, then I don't need to look for agent already. Right?
No,
I just
not
go
true,
Google.
not true. Because for example, right, if I ask all these questions, right, next time, let's say I move house, right, do you think that I because I asked this question already, I know how to do my ID, I do it myself? No, I value the services, I value the advice, I value the project management. I will just outsource because these are not the thing that I would like to do it myself. The other example is that when I buy house, right, of course you will engage lawyer, right? You can treat it as like a transaction. Okay, the lawyer help you do SLA, everything done already. For me, right, my last time my lawyer, right, I actually went to the law firm like many times because that's the one person that I trust when it comes to legal related matters. For example, let's say tenant run away, what should I do? These kind of situations, I also chat with my lawyer, because you already have all these commercial terms already, you already pay money, and sometimes the relationship is that you just need to tap to that as like the person that can help you, advise you on what to do, right? But if you don't do that, then is it wrong? It's not wrong. It's just that you are not extracting value. So to me, it's the agent is the same. You have that relationship. Any funds, right? You can chat with your agent, ask the opinion, because like Chiking said, right? Actually, among friends, when you ask these kind of questions, right, you are not getting a good answer. Maybe you ask Chiking also, you are not getting a good answer because Chiking will think that, oh, why are you asking me? If I tell you too much, am I giving advice here? So it's like among friends, it's more like just casual chat. You are not getting a serious answer. But when you talk to agent or talk to your advisor, right, because the person have a license, right, so you get this kind of like more, I would say, serious kind of answer. You like it or not, after you get the answer, you want to cross-check, you want to validate or not, you want to ask ChatGPT, you want to debate again. I think those are additional stuff that you can do. But at least there's someone who can converse with you, right? So I think that's a good start, right? For those who are curious. If you're not curious, you don't want to do all this work, I think that's perfectly fine. But you cannot say that I'm not getting value, right? You paid already. The moment the first premium that you paid, right? How many thousands goes to your agent's pocket, right? You already paid. Then now times to extract value, but you are not doing more, right?
I think you're maybe assuming that everyone has your level of
He
intensity.
is. He's the top. He's the top 0.1%. I think clearly, I think he doesn't recognize the
But you have to understand, no?
privilege.
Me 20 years ago, right? The list of the fund that Kelvin just showed, right, is exactly those type of funds that my agent showed me. And up till now, right, I still don't know what's in those funds.
Come on, even until now, you ask me the list that Kelvin showed me. Clearly, given that I have a finance degree, unless I go in to look at the fund fact sheet, or if I really am very interested in the fund, I wouldn't even bother, and I wouldn't know. I can guess maybe in that particular fund what kind of stock they have, but the exposure, the objective, what it really means for me as an investor, and what's the implication. If I'm really not interested, I wouldn't even bother thinking or even asking. And if the transaction is, or the advisor is there to provide the opinion or to help me, then I'll just outsource everything and just listen to him. So that's my point as well.
Which works, right? I mean, I think when I renovate my place also, there are many things that the ID say, do this, I tell you, do this. Then I just follow. And I'm happy with that advice until today, right? I'm not ready to think too much about like, what if I take the other options, would it better today? Like the door that I choose for my room now, if I choose the other options, is it better? I won't think about all this because I trust my agent, right? And I trust my agents until today, then I should be happy with that, right? To me, it's a conscious decisions when you say, okay, I trust my idea, I trust my agent.
But
Right?
what if your agent he just became an agent last week and he wants to
It's okay
earn
one
money?
because I think agents, they don't work individually one, they don't solo one. They also have their senior behind guiding them, companies or advisory firm behind that guiding them. So at least you are not tapping to just a single person, right? You're tapping to a network of peoples, right? And then you ask questions. If your agents can't answer you, then you should expect him or her to go and research and come back to you with your good answer, right?
Yeah, so it's also the consumer themselves have to do homework. Cannot just rely on the agent.
No, it's more like, oh, I asked you this, you don't know, can you find out? And then next time we chat again. you know, rather than, oh, I need to go back and I do my study because I'm not letting you earn my money, right? So I DIY everything, I search it myself, right? So to me, it's still different. It's still a form of service, right?
I think no wonder no agent dare to sell you anything.
Cannot
They will
agents sell
turn
me,
around and
turn around.
ask you
I'm
to
the
do the
one that
same.
educating the agents now. No.
Yeah.
Maybe I'll leave off. This very quick thought came to my mind. I'm not too sure why. This is based on my anecdotal experience. People around me in my age group, mid, late, mid, late 20s or very early 30s, like plus minus 5. My personal opinion, of course, I'm not licensed and I don't have the context and I don't understand their financial situation. But based on my very general sensing and vibe, those people that tend to have ILPs actually need a lot more help than those that don't have ILPs. I don't know where I'm going with this, but yeah, that's just my thought. I don't know why it came to me. In a sense, more like those that have an ILP based on the circumstances and my understanding of the person, actually, if he instead went to an investment course and spent that $1,000 to pay a trainer to learn about what investing is, what about inflation, index funds, ETFs, and he do a DIY and go through it, like really stick to basic principles of investing, I think net he will be in a better position than to do and to talk to this person and come up with 6 list of funds and allocate into this kind of things. That's of course my personal opinion.
You're too idealistic already. We have more better things to do, like comment on Reddit, bash influencer, than learn all this kind of stupid stupid education.
No. I think you're conflating two different things. Because what I'm really saying here is the people that I know, especially my friends that are in like your engineering, your humanities, doing a government job, they don't even know influencers. It's not even in their region of mind that they want to go and engage or want to listen to finance related content. Like it's really not in their bone. So that's why they sourced for things like that. And to me, in my own personal opinion, is that if they can actually dedicate the time to learn a bit more, I think they would be in a better position. That's of course my own view. And instead, the funny thing is, I think in a very general sense, especially because of people like Bunty or people like Kelvin or people like us in the four of us here, because we're so conscious and we do a lot of our study, even if we were to allocate a small amount of money to go into ILP, I think it wouldn't harm us. Like, to be very, very frank, I think it's quite ironic if you think of, I'm trying to do some mental gymnastics here, but it's exactly people that need more help shouldn't go into ILP. And it's people that already don't need help and doing very well in life. They can buy ILP, I think also no problem because it wouldn't even affect, or the variance of outcome actually isn't really very great anyway. I'm not too sure whether this lands correctly, but feel free to leave in the comments below. I think this was a pretty extended and extensive discussion, and we'll see you guys in the next video. Tell us what you think about investment linked policies, and yeah, we'll see you then. Goodbye.